How's it going, guys? It's Will with Will Stock Picks here. Today I'm very excited to share with you how to recognize a pump and dump, how to recognize a fake out, and I'm also going to go on with a little bit of a rant on why you will consistently lose money if you follow Guru's alerts. So this video is going to cover those three things. If you're interested in that, be sure to watch till the end and let's get right into the video. So first things first, I want to show you the trades that I made on BPTH. This is going to be a trade recap video. Now, fortunately, I did end up live trading on stream for free on YouTube. You know, I know several gurus, they charge like $300 for just one day to watch them live stream. Well, I did it for free yesterday. We had several students, several people, not even students, make thousands of dollars on this particular trade. So if you want to see the link to the live trading footage of the actual live stream, click the second link below in the description and you can see the full stream I did on this trade. This is going to be a recap teaching you how I did it. If you want to see the live trading footage of me trading live, just click the second link below in the description. So let's get into this. So the broker I used to execute this trade was Centerpoint Securities. The reason why I use them is they're the best broker for finding shares to short on hard to borrow stocks. And that is mainly what I do, especially now that we're in a bear market. I'm mainly focused on going short, especially since 3 out of 4 stocks follow the market. So I wanted to go over BPTH. Here is the trades that I made. As you can see, I got executed on a short position, BPTH, at $3.06. I took this position, the timestamp around 8:40 a.m. I took this position in the pre-market. And then I ended up covering, you could see, buy to cover. So I got executed at $2.75, making a $4,681 profit. So I kind of wanted to go over with you how I was able to make this trade and, just one thing I'm noticing wrong with this community, there's a trend that nobody's seeing, and my students and I, we were consistently making money following this one simple trend, and it's basically betting against gurus. So let me pull up my charts and scanners and let's just go over the trade. So, first things first, you're probably wondering, how did I find this stock? Well, I usually find stocks off my Thinkorswim scanner. But in this case, I actually found the stock in my chat room. So this is my chat room, and I wanted to share with you how I found the ticker symbol. One of my students, one of my most successful students, Cedric Williams, he joined my mentor program just 3 weeks ago. He already quadrupled his account, and he freaking nailed BPTH. He got in so close to the high of day. So as you can see on April 3rd, which is the day we made this trade, the timestamp is right here. You can see it was from Cedric. He was in at 8:22 a.m. So he got in before I did. And this is what I love to see. I love to see students getting in the positions before I get in on them. It just goes to show you that I'm creating self-sufficient traders. So as you can see, the timestamp is right here. He got in at 8:22 a.m. and he was short. So SS means short sell, and the ticker symbol was BPTH, and he got in at $3.19. He was risking 330. The pre-market high was 328, so he was risking 2 cents above the pre-market high. And his reward, he was trying to get out at $2. So he was trying to make $1.19. His price target, his reward was at $2. And he added even more shares because it went up a little bit. He added more shares, averaging his cost up at $3.23. Now he covered way too soon, but still a very solid gain. Nothing to complain about. But he covered way too soon at $2.89. So that's how I found the stock within my chat room. He alerted it, and then, as soon as he alerted it, I took some time, to figure out exactly. I was trying to figure out, why did he get in on it? Why did he short sell the stock? What is he seeing in it? So once I figure out that why factor, and if the risk reward is above a 3, because my group and I, we have to have our risk reward at a 3.0. That's our standards. I know most groups, they say get a 2. Well, we aim a little bit higher and we aim for a 3.0, which basically means, you risk 1 cookie to make 3 cookies. You risk $1 to make $3, risk 10 cents to make 30 cents. So anyways, once I figured out, which is what I'm about to explain to you real quick, once I figured out why he got in on that position, I took the position. So I want you to understand, I didn't follow his alert. If I were to follow his alert, I would simply say, oh, Cedric, let's say he's a guru. Oh, this guru made tens of millions of dollars. he just got in on a position. That means I should take a position, right? No, you have to understand why the person took the position. And if you understand the why factor, and if you see the full, bulletproof plan, then it's okay to go in on the alert as long as your entry is, somewhat as close to theirs, and as long as the risk reward is above a 3. So if you understand the why factor, it's okay to go in on the alert. But if you don't understand why and you just follow alerts blindly due to somebody's success, then you will consistently lose money. And I'll explain to you why later. So as you can see, at 8:43 a.m., I then alerted that I went short on BPTH, and I was in at $3.06, so I was in a little bit lower than him. My price target was at $2.50. My goal was to make 56 cents a share. My mental stop was at $3.20. So let's plug in the risk reward on that. So I was risking 8 cents below the high of day. So my entry price was at 306, right? And my stop loss price, let's pull up the stop loss, $3.20, which was 8 cents below the pre-market high. And my target price was at 250. So unfortunately, I did not cover at my price target. I got out a little bit too soon. My price target did end up reaching. It usually does the vast majority of the time. I just have to work on, really maximizing that position. But as you can see, my risk reward ratio, as I got in on this plan was a 4.0. So that's why I took the position. The risk reward was a 4.0. And I'm going to explain to you real quick why I took the position when it comes to trading signals and entries. So now that you saw the proof, on where we got in and, what the plan is, what the price target was, what the mental stop is, I'm going to share with you why I got in on this particular stock. So let's get into that. All right. So if we pull up 8:40 a.m., so let's go to around 8:40 a.m. I'm going to show you why I got in. So I got in right around here. Let's pull this up. All right, okay, wait, that's the wrong, 1 second. Okay, so right around here. Here's where I got in. All right, so why did I get in, right where this oval is, right? Why did I get in right around here, right? Okay, first things first, you have to check the chart history. The chart history is going to tell you where the overall trend is going to be for the day. That way you put yourself in a position where you can not just make money for the next couple minutes, but you can also make money holding the stock for the next couple hours and the next few days. That is called putting yourself in a position where the overall trend is going to be for the next couple minutes, for the next couple hours, and for the next couple days, right? So if you trade that way, you're not going to be scalping. You're going to go from a scalper to someone who's maximizing their positions, trading the best setup, making 10, 20, 30% returns in a single day on your position. So let me show you how I figured out the overall trend for the day was going to be a downtrend. So if you go back to the chart history, my strategy purely relies on the quote, history tends to repeat itself. So if you look right here, this is what I used for the history, this 1 day candlestick. So this was the data that I was interested in watching. So as you can see on December 1st of 2017, it got to a high of $3 and it got to a low of $2.33 and it closed at $2.60, right? So it had a 67-cent pullback from the high of day and it closed very weak. It closed, 20 cents, 27 cents above the low of day. And just look at this candlestick. This is a very bearish candlestick. It's a very weak close. And look what happened the next day. The next day, it bottomed at $2.02. And look what happened 2 days after that. It bottomed at $1.90. So here's what the short-term trend is. Here's, when it comes to history tends to repeat itself, here's what I'm interested in. The short-term trend is when BPTH hits $3, if it tops out at that resistance, so, if it puts in that double top, if history repeats itself, if it's going to be a fake out, guess where it's going to go? Same day, it's going to go around where it went to last time, $2.30. The next day, it's going to go to as low as $2. Now that's if history repeats itself. So, this is all great, this theory of history repeating itself, but what if I told you that it's not enough? What if I told you that you need to have a trading signal that confirms that history will repeat itself? That way you increase your win rate and not just trade off a theory. So here's how I'm able to confirm that history will repeat itself. So what do I care about? I care about $3. I care about that major resistance level. If you look back throughout the chart history, there's a very, very strong price channel. Let me go a little further back so you can see this price channel. So here's where this price channel is. There's tons of resistance right here at $3.30. There's tons of resistance right here at $3.10, and there's tons of resistance right here at $3. So what this tells me is, this tells me there's major resistance from $3 to $3.30. So that's where the stock can potentially top out for the high of day, right? So now that we have an idea on where it could top out, we look for trading signals around those resistance levels to confirm that history is going to repeat itself. And you know, when you're doing this, you need to pay attention to the volume. So understand, on this day, it went from $3 to $2.30, but in order for it to, you know, have that price action, the volume has to be similar. You know, in this stock, this is the beauty of this stock, it only had 223,000 in volume on this day, and it had the price action, it had the volatility. So imagine how much price action, how much volatility it's going to have when it has millions in volume. You know, yesterday it had millions in volume. Look at the volume it had. It had 12.2 million. That's why it was so much more volatile, and that's why it even went lower than 233. It went to $2.11. You know, it was able to do that because it had more volume. The more volume, you know, the more price action you're going to get, right? You know, the more volatility. So that's why it was a little more volatile than last time, because the volume was higher, which even makes the trade better. You know, that more volume, you're going to have bigger profit margins. So now I'm going to share with you, how was I able to figure out that history will repeat itself? So we know, you know, in the history, there's tons of resistance from $3 to $3.30. And we know, due to the heavy amount of volume, you know, if history repeats itself, this is going to go to the low twos. So now that we know that, all we have to do is confirm where history is going to repeat itself. And once we confirm that, guess where we want our entry? We want to get in as close as possible to the top. So the top is going to be somewhere from $3 to $3.30, right? So like I said, my student Cedric, he got in very close to the top. He got in at 3:19, 8:22 a.m. in the pre-market, and then he added at 3:23. Covered way too soon, but still, you know, very solid profit. Got out at 289. So I'm just going to share with you why I got in where I did. So I got in at this little, you know, mark right here. So the key is, you know, now that we went over the chart history, the key is the pre-market price action. You have to look for weakness. You have to look for bearish confirmations around $3 to $3.30. So I'm going to start drawing some price levels here so you can see exactly what I'm talking about. Okay, so main thing I want to go over is this support level, 250, and I want to go over this price action right here. So here's the key. This is the key right here. And then this support level right here. So this is basically all you need to know when it comes to price action. It's my strategy is very, very simple. So here's the big move. So what I call this is, I call this the big move. So we want a major pullback. We're looking for a pullback somewhere in between $3 and $3.30, because that's what history is telling us, right? So once we see the pullback, we wait for it to retest. And then once it retests, if we see a bearish confirmation, then we short sell it. So understand, so, you know, Cedric, he got in at the first time. If you do it that way, your win rate might be a little bit lower, but you will most likely get a better entry. So it's okay to go with the first time. So he went with it as soon, you know, so he went with it. Actually, no. Okay, so my bad. I said that wrong. He got in right around here. So he did exactly what I taught him. So I said that wrong. I apologize. So here's what he saw. And the reason why I didn't get in exactly when he did is because I wasn't watching the stock. You know, I usually start watching stocks around 9 a.m. I usually don't even short sell in the pre-market because it's extremely risky. These stocks can spike very quickly at open. But if your entry is solid and if the pattern's right, it's okay to do it in the pre-market. It's just something I typically don't do. That's why I usually wait around 9 a.m. to 9:15 to even start watching them. But this happened to be one of those trades where, you know, it was going to be a good one. It had an exception to that rule where I usually don't trade in pre-market when it comes to shorts. So anyways, here's the big move. So I'm going to show you what Cedric saw, and then I'm going to show you what I saw. So the big move was $3.24, and then it bottomed at $2.95. So what does that tell us? That tells us that that 324 level, and remember the short zone was from 3 to 330 due to the chart history. So that's telling us that it's acting as a resistance level, which means this is a confirmation due to this pullback. This is a confirmation that history is going to repeat itself because it's failing to break out. It's acting as a resistance level and it's failing to break out. So here we go. Your new support is at 295, right? And your new resistance is at 324. So what you have to understand is whichever level breaks first, that's who's going to be in control for the vast majority of the day. So if 295 cracks, the bears will take control. And where does it go if 295 cracks? It goes to the next support level. The next support level is all the way down here at $2.52. A lot of profit margin. That's what you have to look for. You have to look for big profit margins. So here's what we know at this point. We know that it topped out at $3.24. And looking back throughout the chart history, it's acting as if history is going to repeat itself because it topped out between that $3 to $3.30 range. And if history does repeat itself, we know this can go to as low as $2 today. So the profit margin is insane if you can get in close to the high of day. So now that we recognized that there's weakness in the 320s, we start to become confident. The reason why we're confident is this is a sign that history is going to repeat itself, right? So what do? What I usually do is I usually wait for it to retest. So if you wait for it to retest, you might end up missing out. So there is some FOMO. So the cool thing about waiting for it to retest is you will get a very good entry and you're trading in a confirmed passion. Now, the bad thing about, waiting for it to retest is if it doesn't retest, it's going to either put in a lower high or it's going to crack the support level. Now, you could short sell it as a key breakdown. The key breakdown is at 295. So once that cracks, you could do that. It's just your entry is not going to be as good. So if you don't have as good as an entry, all that really means is you're just going to have to, you're not going to be able to risk if it's going to be a fake out. So let me explain to you what I mean by that. So if I get in at 325, right? So here, my price target, so I'm trying to explain to you what I'm talking about here. So if my entry price, say I got in at 325, say I got in at the tip top, and we know that's the tip top because that's where it topped out. So say I wait for the retest, right? And I get in at 325. Well, my price target is going to be at 250. So due to that insane profit margin, my stop loss can be above the resistance, which basically means I could hold through a little bit of a breakout. And the advantage of holding through that little breakout is it could be a fake out. So even if it breaks 330, say it goes to 350, my price target most likely is not going to change because even though the stock had a little breakout, if it's going to be a fake out, the overall trend is going to be a downtrend and my price target should still reach. So I can have my price target, my risk reward, it only has to be a 3. So there we go. So I get in at 325 and set my stop loss at 350, price target at 250. So I make 75 cents and I risk 25 cents, right? So the advantage of getting the best entry is you're able to hold through the breakout because here's one trend I've noticed. And here's a perfect example right here. It topped out at 324 and then look, it had a breakout, but it only got to 328. So the advantage of having a better entry is you're able to risk more above the resistance level, which basically means you're able to hold through a breakout. And if it's a fake out, your price target is still going to reach. And if it's not, if it's not a fake out, then you just get stopped out and you take the small loss. Look at this, look at the profit margin on a 3.0 risk reward ratio. With my account size, I risked 2% of my account on this trade. So, if I would have got out where my price target was and if I would have got in right here, just look at the profit margins. I would have lost $4,100 if I lost. And if I won, I would have made $12,400. So when I win, I make 6% return on my account size. When I lose 2% return on my account size. And that's at a 3.0 risk reward ratio. If I have a 4, I'll make an 8% return and I'll lose 2%. If I have a 5, I'll make a 10% return and I'll lose 2%. So the higher risk reward ratio you have, the better chances you have of staying in this game. And, due to the high risk reward ratio, you'll be making much bigger returns, which means you don't have to scalp stocks, period. The higher your standards are, the less you have to trade. So for those of you under the PDT rule, it's important to understand that it's a blessing because it's giving you an opportunity to put yourself in the best position possible to succeed as a trader. And the reason I say that is, you only have 3 trades on a 5-day rolling period. So why not raise your standards as high as they can possibly be You know, so me personally, I aim for a 3, but why not have higher standards than me? Why not aim for a 6? Why not aim for a 7 as your risk reward ratio? That way, the trades you're missing out on, it's going to make up for all the trades you missed out on, because your returns on your account size will be so much bigger because you're trading the highest quality setups the market has to offer. So see, the PDT rule, it's not a bad thing. It literally puts you in a position, if you have the right mindset, and if you have the right strategy, it puts you in the best position possible to succeed as a trader. I strongly believe your standards should be the highest when you're under the PDT rule. Once you get off of it, then, you know, you can lower your standards a little bit, you can trade a little bit more, but your standards should still be high, even if you're not under it. So just keep that in mind. It's a good thing. It's putting you in the best chance possible to succeed as a trader. You know, if your risk reward is higher, you have a better chance to succeed. You know, it's common sense, guys. I mean, it's amazing what a high risk reward ratio can do for you. When you lose 1 to 2%. My risk per trade is 2%. I recommend have yours at 1, 1.5, no more than 2. But yeah, the higher your risk reward, the bigger return you're going to make on your account. So, you know, at a 3.0 risk reward ratio, I can break even with a 33% win rate. You know, my win rate is at a 70%. So you're probably like, wow, your win rate's at 70%. Why don't you just, you know, settle for a 2.0 risk reward ratio? Because I came to a realization to where if you raise your standards, you'll still make the same or even more money as a scalper because your returns will be much bigger. So you have to understand, you know, yeah, they're trading a lot more than me, but my returns are a lot bigger than theirs. So that makes up for the quantity. My quality makes up for the quantity. And the cool thing about having high quality is you're putting yourself in the best position possible to succeed as a trader. You know, for those of you who want to scalp stocks, you shouldn't be scalping when you have a small account. You know, if you want to scalp stocks, if that's what you want to do, me personally, I do not even scalp stocks with my account size. Because if you understand how risk management works and if you understand how the strategy works, you'd realize there's no point of scalping, you know? So I recommend don't even, if you do want to scalp, wait until you're off the PDT rule. But, you know, hopefully I can convert you, you know, if you subscribe to this channel, hopefully I can convert you to just trade the best setups, because you'll soon to realize how much more profitable you'll be and how much of a bigger chance you'll have to succeed as a trader. And another reason why I don't scalp stock is my goal is to not be the richest person in the world trading. You know, I do this for freedom, right? So like I only trade, you know, 30 minutes, an hour a day, usually 1 to 2 trades a day, right? So, you know, I don't want to be a slave to my desk. You know, some people, that's fine. Like if you want to do that, if you want to be here for 7+ hours a day, if you just want to scalp stocks, that's fine. I can guarantee you, you're putting yourself in a much harder situation compared to me, because, you know, trading is very tough, especially the more you trade. You know, your mind, it has to be sharp 100% of the day. You know, it's just, especially if like my strategy is not that complex, that's what helps me out a lot as well. But if you have a complex strategy and you're making, you know, 10, 20, 30 trades a day, it's going to be really hard to be profitable. You know, you have to think of the commissions, right? You have to think of all these factors. You know, one little screw up can wipe out your whole day. That's why I just like to trade the best setups and focus on nailing 1 to 2 trades a day. So yeah, that was a little rant I wanted to go over, because most people think, you know, the PDT rule is a bad thing, I have to get around this. It's not, and you would understand it's not if you raised your standards. It's all you have to do is raise your standards. If you raise those standards and get a higher risk reward ratio, get a better strategy with a higher win rate, you will soon to realize you'll be making a lot more money if you trade the best setups and not scalp stocks. It will make up for all the trades you missed. So as I was saying, so the cool thing about having, right? So the cool thing about getting a better entry is you get to put your, okay, so right, say I'm in at the best entry. Well, I get to put myself in a position to where, okay, so I put myself into an opportunity to where if the stock breaks out and it's a fake out, then I can hold through that fake out to an extent, right? So basically what that means is, say it breaks out past 328 and I'm in at 325. Well, I'm giving myself a cushion all the way to 350 if it has a fake out, you know, anything below 350, that means I can hold through the position. So that's the advantage. You're giving yourself the opportunity to hold through that breakout and put yourself into a situation where if it's a fake out, you can hold through and still capitalize on your position, still hold to your price target. I'm telling you, even if these stocks break out, my price target still tends to reach. That's why I don't raise my price target when I'm short selling. Because even if it breaks out a little bit, as long as it's a fake out, as long as my confirmation goes off before that stop loss, I will continue to hold that position and it will most likely reach my price target the vast majority of the time. So that's the advantage to getting a better entry. Now I want to show you the cons of short selling the key breakdown. So let's say instead of getting the best entry, let's say I shorted the key breakdown. So the support is at 295. So when it comes to, short selling a key breakdown, I usually wait until it cracks support. That way it's confirmed. So 295 is the support level. So I wait for it to crack, say I get in at 290. So now let's switch up the entry to 290, right? And we're going to keep our price target at 250. So the price target cannot change because that's where it is. So I'm in at 290, price target is at 250 and stop loss. Now we're going to have to get to at least a 3 for me to make this trade. So look at this, man. Look at how tight my stop has to be because of that entry. So it looks like 305. Okay, let me type this in, right? Okay, a little bit. All right, so we're going to call it 303. So see, this is what sucks about not getting the best entry. This is what sucks. You don't have as much as a cushion. So if I get into 290, my risk reward has to be above a 3 for me to make a trade, right? So if I decide to get in at 290, then my stop loss has to be at 303. And my price target is at 250. So, my profit per share is 40 cents and my risk per share is 13 cents, which puts me at, slightly above a 3.0, right? So the disadvantage to short selling the key breakdown and not getting the best price, not short selling that major resistance, the disadvantage is, you don't even get to see how it reacts to this resistance level. Suppose it goes back up to 328 and suppose it fails to break out. Guess what? Your price target's still going to hit. And then you're going to be like, oh man, I should have held. No, you shouldn't have held, because guess what? You have to stick to risk management. If you want to win, you have to stick to risk management. So, for those of you who are like, oh man, I should have held and not respected my stop loss. No, what you need to do is you need to get a better entry. That way, when you respect your stop loss, it's going to make sense, right? And you can hold through those fake outs. So me personally, this is why I prefer to short sell major resistance. Because if I were to short sell the key breakdown, guess what? I don't even get to see how it reacts towards the resistance level, Suppose it goes back to 320, but it fails to break out. It's going to crack that support level. And then I'm going to be like, oh man, I should have held. So this is why I go for the major resistance level. The advantage to getting the best entry, and this goes for everything, same thing with dip buying. The better price you get on buying the dip, same thing, you can hold through if it cracks support level. Just because it cracks support, yeah, the bears are taking control for the short term, but that doesn't mean they're in control for the overall day. Same thing with this situation. Just because the stock breaks out, yeah, bulls are taking control, but does that mean they're going to be in control for the rest of the day? No, because I'm putting myself in positions where the overall trend is. And when you're trading this way, you will soon to realize how important it is to get the best entry. So the better the entry you get, you can put yourself into those opportunities to where, to where you're like, oh, I should have held, to where you'll actually be holding because your stop loss will be above that should have held price. So that explains the entry, right? So let's go over where I got in now. So I just wanted to go over that little rant so you can understand how important it is to get the best entry, right? So let's go over my entry. So I'm not sure why this is here. Let me remove this. Let's see. Okay, there we go. All right, so here's the big move, guys. So 324 to 295, right? So what do we do when we see that? What do we do when we see, wow, history's repeating itself. It's showing there's resistance around that short zone we were looking at. What do? We wait for it to retest. Once it retests, I'm going to give you the confirmations. I'm going to give them to you right now. There's confirmations that are going to tell you if it's going to be a fake out. So we wait for the stock to retest because that's the best, that's the safest, and that's the best way you can possibly play it. So it retested. Here's where it retested. let's see how it reacted. Bearish candlestick, has a pullback, retest again, slightly breaks out by 4 cents, but then this 1 minute candle gives away a lot. This is bearish. It hit 326, it hit 328, so yeah, it had a little breakout, but guess what? It quickly crashed to 306. And then one thing I consider a bearish confirmation is when a stock consolidates at the highs. So this right here, this is what I consider, these 4 candlesticks right here, this is what I consider a stock consolidating at the highs. And you also, when it's consolidating at the highs like this, you also want to look for a pullback like something like this right here where it quickly crashed to 306. That's a confirmation that, hey man, this is looking weak. You might want to get in on it. So this is what Cedric, you know, one of my most successful students, this is what he saw. As you can see, he got in at 8:22 a.m. at 3:19, and then he added at 3:23. So he got in at 8:22 a.m. So let's see where he got in. 8:22 a.m. So he got in right here. So why did he get in right here on this candlestick? He recognized once it retested resistance, it formed a bearish candlestick, and guess what? It consolidated towards the highs, the volume was starting to fade. That is why he got in, because he understands if it's going to be a fake out, if it's going to fail to break out, it's going to go back to 295. Once 295 cracks, it's going to go back to the next support level. Next support level is at 250. So, you know, why wasn't his price target at 295? Because that's where the support was, right? Why was it all the way down here around 2 or 250, right? Why was my price target at 250? Because main thing you have to understand is price channels. This is the price channel. It topped out at 324 and it bombed at 295. Whichever one breaks first, that's who takes control. So I'm playing this more than a price channel. You know, I understand if it breaks out past 324, bulls are in control for the short term. And when I say short term, I'm talking about minutes. It's not a big deal. Now when the bears, right, the overall trend is bearish due to the chart history. When the bears crack this 295, they're going to be in control for the rest of the day. So I'm not looking to scalp, right? I'm not looking to get in, you know, so I want to get in towards the top, but I'm not trying to cover at 295. I'm trying to cover at 250. And the reason why is, you know, I'm playing this as a price channel because I understand, you know, if the bears are going to be in control, you know, once we crack 295, I need to hold this till 250 because that's where the next support level is. So you have to look for big profit margins like that. You know what's annoying? When you short sell a stock at 295 and then there's support at 285, 275, 265. Then you have to go through all this nonsense, all this support levels. That's why I look for big profit margins like this. The next support level is at 295 because that's where the stock consolidated. This right here, these two candlesticks, I don't consider this support. That's simply an uptrend. That's simply a spike. What I consider support is consolidation, which is what you're looking at right here. This is consolidation. So I understand once 295 cracks, it's going to 250. And then once 250 hits, I have to make a decision. You know, am I going to get out? That's heavy support. Last time it hit 250, it went to 330. So I might as well play it safe and get out. You know, the further the stock goes down, your risk reward, it's just not going to be as good. It's going to get lower. So you have to look to take profits at some point. So that's why he got in. I would have got in where he got in, you know, because it was obvious that was the best price because that's where it topped out and the chart history confirmed that, right? So I would have got in where he got in, but I wasn't watching at the time. Like I said, I usually watch these stocks around 9 a.m. because I rarely short sell stocks in the pre-market. It's extremely risky to do, but in certain situations, I'm willing to do it, you know, because it's not that risky if you're in towards the threes and you risk the high. I mean, this was my full plan. And if you don't believe me, you can see me trade this live. It's the second link below in the description. I traded it live on YouTube for free. Gurus are charging hundreds of dollars for one single day. I'm doing it for free, right? So you got nothing to lose. It's just going to be nothing but free education and free value. You know, you could spend your time watching that and becoming a better trader, or you can watch Netflix. You know, it all depends on, you know, what results you want out of your life. I know what I would do. So the entry price is 306, like I said. The target price is at 250 and my stop loss, what was it? I think it was might have been a little bit, let's see, 320. So yeah, my risk reward was a 4. Now, obviously I covered too soon, so it was a little bit lower than that, but my plan, I was right about the plan. I just didn't maximize. Sometimes I maximize and hold to my price target and get out. Sometimes I don't, you know, you can't trade perfect every single time, but still very solid risk reward. My intention was to get a 4.0 risk reward. And if I would have been more patient, I would have gotten it. So why did I get in right here? Here's where I got in. Let me explain to you why. All right, so here's the key here. So let's pull up. Okay, let me go back to this. Okay, so my bad. Let me remove this. I drew it wrong. Where's remove? Okay, okay, just ignore that. Oh, there we go. All right, so I got in. Yeah, here's where I got in, right around here. So why did I get in right here at $3.06? Why did I do that, right? Reason why is, first things first, it retested the resistance level, right? So this is a double top. Here's the first resistance level, and then here's the retest. It's a double top, so it failed to break out. So if a stock fails to break out, where's it gonna go? It's gonna go back to the previous support level. Previous support level is at 295. So as you can see, it bottomed at the previous support level, which is bullish. But you wanna know what's bearish? Lower highs. If a stock puts in lower highs, it's most likely going to crack through the support level. Once I identified the lower highs, I took action. So here's how I was able to identify the lower highs. Consolidation towards lower highs. As you can see, it bottomed in the 290s. Well, it actually bottomed at $3. But then it started putting in resistance at 308, 308, 310. And then it started consolidating around that level. And then it started, you know, it kept trying to go back to 3. Right here, it went back to 306. Then it went back to 305. So once I noticed that it was consolidating at a lower high, that's my confirmation that, man, once a stock puts in lower highs, it's not only going to go back to support, but it should crack support. If it consistently puts in new lower highs, most likely going to crack support. That is a bearish confirmation. It's simple support and resistance tactics, guys. You don't need to use indicators. You don't need the EMA. You don't need the RSI. I have the RSI on. I rarely even use it. It's not that, it doesn't help a lot. All you need to do is trade stocks at the best prices, and you need to trade the best setups. So for me, the best setups are my unique gap strategies, and having that mentality, having that concept of how history tends to repeat itself. You know, why be long biased on a stock that topped out at 330 and went to $2 the same day? Why be long biased when you could be short biased, get in at 330, cover at $2, risk 10, 20 cents? Like, to me, it makes no sense why people are interested in buying a stock. So like, say you buy it at 330, okay, it goes to 350, you make 20 cents. But what if what if there's $1 and like 20 cents of downside, right? It just makes $1.50 of downside. You have to put yourself in positions if you want to win on where the overall trend is, which means you're trading the best setups. You're not scalping. Scalpers, they don't care about the overall trend. They only care about the next few minutes. They don't care about the next few hours, and they don't care about the next few days. And sometimes my intentions are to trade within a few minutes, but I'm still trading the best setups, you know, because my price target, sometimes my price target hits within a few minutes because I'm trading extremely volatile stocks. You know, this stock can go from like 350 to 250 within minutes, right? So it's important to understand, even though I'm trading volatile stocks, I still like to put my, you know, where my price target can hit within a few minutes. I'm always putting myself in positions where I'm going to be right for the next few minutes, but most importantly, for the next few hours and for the next couple days. That way I can fully maximize my position and I'm going to be right about the overall trend. You know, why would I care if I'm wrong in the next couple minutes when I know I'm going to be right within the next couple hours and next couple days? Put yourself in positions where the overall trend is. This is it's so obvious that the overall trend is downtrend. I'm just so, you know, it just blows my mind on how people are following these gurus, chasing these stocks, and we'll get into that. This is where it gets really intense. But anyways, I got in due to lower highs. You know, as you can see, there was resistance right here at 313, went back to support. So resistance right here, support right here, bombs that support, goes back to that resistance level, fails to break out. Guess what happens when it fails to break out? Cracks through support. New lower high. New lower high means bears are in control. Guess what happens? Cracks support. New lower high. crack support. It's cracking support because it's putting in these new lower highs. This is a game of simple support and resistance, recognizing price action, recognizing candlesticks, recognizing bullish and bearish confirmations. Confirmations I look for, you know, the volume, consolidation, bearish and bullish candlesticks. See these dojis? If you see a doji, if you're using Thinkorswim, it's going to highlight in gray. There's 5 different dojis. The main ones I use, the best ones in my experience, are gravestone dojis and dragonfly dojis. If you see them form at resistance or lower highs, it's bearish. If you see them form at support, you know, it's bullish. So keep that in mind. These dojis are forming at lower highs. It's bearish. So those are some of the confirmations I use. Pretty simple, not that advanced. If you've subscribed to the channel, you'll soon learn how all this stuff starts to work. So now I want to get into, let's go in a little bit deeper here. So in the pre-market, it bottomed at 273 and then it spiked to $3. So, you know, pretty close to my initial entry. The reason why I still held through that is because I still recognize, okay, yeah, you know, these stocks, sometimes they could spike back, but the overall trend is still going to be a downtrend. So I'm still going to continue to hold and I'm still going to fully maximize the position. You know, when it comes to me as a trader, this is just in my experience. My price target tends to hit the vast majority of the time. So even if my price target's at 250 and I'm short 306, right? And it dropped to 270, and even if I think it's going to go back to $3, I'm trying my best to still stay in. I know that's not the smartest thing to do, but the reason why I say that for myself is, you know, even if it goes back to 3, my price target still tends to hit. You know, another thing I could do is I can cover in the 270s if I feel it's going to go back to 3, and then I can look to reshort it at 3. But if it doesn't go back to 3, then guess what? I'm not going to be able to reshort it, and then I'll miss out, all that stuff. So like for me, my price target tends to hit almost every single time. So I'm just trying my best to let the trade play out. And letting the trade play out, what that means is you either get out at your stop loss or you get out at your price target. So you're waiting for one of those two to hit, whichever one hits first, that's when you get out. Simple as that. So that's just in my experience. I can't recommend doing that for everyone. Remember, the only reason I'm trying to do that, I'm still not doing it. But I need to work on doing that because, like I said, my price target hits almost every single time. So that's why I'm extremely interested in doing it. But when you enter a trade, there's going to be variables, you know, support, resistance, candlesticks, say news comes out or something. There's going to be variables that try to change your plan. But since, you know, in my situation, my price target tends to hit the vast majority of the time, I'm trying to let my price target outweigh those variables that are going to change my plan, you know. So that's something I'm really trying to get better on. Sometimes I'll fully maximize, sometimes I'll get out too soon. This case, I got out too soon, but still, you know, very solid profit. My goal is only $2,000 a day, but I ended up making a little bit over double my goal. So anyways, here's where I was fully confident. And if you watch the live trading webinar, you know, you'll see how confident I was. This gave me all the confidence in the world. And let me explain to you why. So there's a guru named Ross Cameron, you know, owner of Warrior Trading, right? So what he does is he scalps. So he just wants to get in, he wants to get out, he wants to make a quick 10, 20 cents. You know, why only 10, 20 cents? Because he's buying tens of thousands of shares. That's why. It's a lot of money if you're buying a lot of shares. So a strategy like that, when you're scalping, it's not going to work if you have a small account because the commissions are going to eat you alive. And one thing I noticed with scalpers is they never take big wins. And in my experience, you're always going to run into either a big win or a big loss. And if you're never taking big wins, you're going to end up losing all your money because you will run into a big loss at some point in time. So it's important to understand, man, when you're just first starting out, you should have no interest in scalping stocks, period. You should be more interested in putting yourself in the overall trend. You know, okay, yeah, let's say I'm bullish on BPTH. I think it's going to go up 20 cents. I can make a quick 5% return. Is that the right thing to do? If there's 80 cents of downside, you know, if there's 10, 20, 30% of downside, is that the right thing to do to try to make 5% return on the upside when you know there's 10 to 20, 30% of the downside? So yeah, now you might be sold on short selling, but don't be discouraged if you can't find shares to short. You know, sometimes you won't be able to find shares to short. And just because there's no shares to short does not mean you should then try to buy the stock and settle for that small return. Keep this in mind, guys. I've been through it all, and I'm trying my best to share with you exactly what you need to be doing if you want to consistently make money in the market and end the year on a green note. So this gave me all the confidence in the world. Ross Cameron, Warrior Trading, one of my students told me he got in at $2.98. So he bought the stock. He was betting against my team and I. And as you can see, that did not work out good for him. You know, the people who choose to bet against me, I wish them the best of luck. But if you watch my content, don't take my word for it. Watch my content. You know, for those of you who are seeing this video for the first time, do not judge me off of this one video. Go back and watch hundreds of hours of free content I posted. Then you can, you know, get a feel of what I do and who I am. So anyways, he bought BPTH. You know, you can watch, I'm not even going to pull up the video or anything. You can watch in his YouTube video. You could see, you know, you could see he got in on this 1 minute candle. So he bought the stock at 9:30 a.m. He got in at $2.98. Here's what you need to understand. Let's go to the 1 minute chart and let's look at the volume. So this volume bar right here, this blue bar, this is at 923,000. This was the biggest amount, this was the largest amount of volume BPTH had on the 1 minute candle throughout the entire day. And that's when he bought the stock. So like I said, gurus have influence. When they buy a stock, thousands of students are going to buy thousands of shares. And that's going to equivalent to, you know, millions of volume. In this case, 929,000 in volume. So this just shows you, you know, this shows you right here how many people are following his alerts. Because as soon as he bought the stock, this was the biggest 1 minute volume bar on the entire day. So that just shows you how many people are following his alerts. There's thousands of people buying, you know, thousands of shares. Some are buying tens of thousands of shares. And so that's one thing you have to keep in mind. When a guru buys a stock, you know, it's very easy to influence because they're usually trading stocks that are low floats with very low volume. And it's not that hard to influence or manipulate a stock when you have tens of thousands of students backing you up on a low float stock with low volume. So I want you to understand their intention, his intention is least, I can't speak for all of them, but his intention, he's known to scalp stocks. So like I said, he takes big positions. So if you're taking huge positions, you don't have to trade the best setups. You know, you can just make 10, 20 cents and call it a day. You can make thousands or even tens of thousands doing that, right? But that doesn't mean it's the smartest thing to do, you know? Does that mean it's a smart thing to do to scalp stocks? No, because you can just trade the best setups. You can trade a lot less, make more money, or even the same as a scalper, and you're putting yourself in a better situation to succeed. Because like I said, you're always gonna run into a situation where you win big or lose big. And if your intention is to only make a small return, then you're most likely going to always sell too soon. So you'll never run into that big win. And eventually you'll run into a big loss because like I said, when you're scalping, see, this is what I hate about scalping. In certain trades, it is impossible to take a small loss. So, you know, say you buy this at $3 and your intention is to have a stop loss at $2.90. In certain situations, it's impossible to do. It's important to understand that. It's important to recognize that. That's why you need the best entries. There's going to be certain situations where the volatility is just too strong, where the price action is too strong, and you just can't take a small loss due to the price action, due to the volatility. You know, suppose a guru buys it, and suppose, you know, that influences the stock and it instantly spikes. So as soon as he got in, he sold it. This clown made like $700 some. So he got in at like $2.98. He sold it at $3.06. So understand, they're taking huge positions. And a lot of these gurus, you know, some of them, they live pretty frugal. Like him, he probably lives pretty frugal. So like, that's probably, to him, that's probably a lot of money, $700, right? Because his expenses probably aren't that high when it comes to like his lifestyle. Because some people who make a lot of money, they live very frugal. So understand, you know, that's a lot of, that could be a lot of money to him, right? Or even sometimes it makes thousands or tens of thousands. But his intention is to get in, get out within seconds, if not minutes. So the reason why his strategy, the reason why scalping is not going to work out for you is because as soon as he buys the stock, he sells it. And when he sells it, you know, it doesn't matter if he made money or lost money, you know, because as soon as he sells that stock, all of his students are going to sell the stock, which is what causes the stock to crash. It's a pump and dump. As soon as he gets in, it starts going up a little bit because he has, you know, hundreds of thousands of shares are being bought. So it goes up a little bit. But, you know, the overall trend for the day is going to be a downtrend regardless of how much power he has. Reason why is history tends to repeat itself. You know, you can only have so much power with, you know, tens of thousands of students following a stock. You can only have so much power. This is why, and he understands this. He understands that he can't get it to go to 350 or 4 He just doesn't have enough power, which is why his intention is to scalp the stock. So understand, he's the only one making money. Obviously, you know, the ones who get in first, they might make a small percentage return, but I'm telling you, they're running into those big losses, man. It's a pump and dump. You're not always going to be able to get in at his entry. You'll end up chasing it. Next thing you know, he sells the shares, and you know, the students who sell the first, they're the lucky ones. The ones who don't, they get stuck holding the bag. It's something you don't even want to mess with. You don't even want to attempt to make money following a guru's alerts, especially when they're scalping, and most importantly, especially when their intention is to scalp. That's the worst alert you can follow. And most importantly, you should never be following anybody's alerts, even mine, anybody. I don't care how much money they made. You should not follow anybody's alerts if you don't understand why they're taking the position. You know, if you don't understand what the setup is, how does it work? You know, for example, this setup was the gap fill strategy. Do you know what that is? Then if you saw that alert and you don't know what that means, then you should not be in the position, regardless if my win rate is 100%, regardless if I made $10 million. None of that matters. Those are just numbers. That does not affect you, right? That's me. That does not affect you. It doesn't matter if I make 10,000. It doesn't matter if I make $1 million. None of that matters to you. Here's what you need to focus on. You need to focus on the pattern. You need to focus on, okay, you know, what was the pattern? What was the strategy? Why was their entry there? Why was their exit there? You know, why was their price target there? What caused them to get in? What caused them to get out? What was their trading signals? What was the strategy? How does history repeat itself? That is what you need to focus on. If you don't know the answers to those questions, then you need to study. And, you know, if you have a mentor and, you know, you're studying their lessons and you're not getting those answers to those questions, you need to ask them, you know, hey, hey, can you direct me to the right lessons? And if they're not helping you out, leave the service, man. It's as simple as that. If you're not getting those answers, leave the service. You're not going to make money following people's alerts. You think it's that easy? 95% of the people in this market lose. And one of the reasons why they lose is because they're a sheep. That's what a sheep does. A sheep sees someone successful and they're like, wow, if I just model what that person does, I'll be just like them. But that's not how it works. You know, in certain situations, it works like that in life, but in the stock market, that is not how it works, you know, unless you are modeling their strategy, you're modeling their mentality, you know, you're understanding why they're getting in, why they're getting out. But if you're just blindly trading, blindly following their alerts because you see some sort of successful track record, or you see some kind of, you know, something you like about them, you know, maybe a lifestyle or something like that, you will consistently lose money, guaranteed. So BPTH, as soon as he got in at 298, he sold at 306, he made like 700 some bucks. Guess what? Vast majority of his students lost money, got stuck holding the bag. Because like I told you, if your entry is not a good entry, you're not going to be able to cut your losses short, man. I'm telling you, man, these stocks are too volatile. Look at this. In 1 minute, it went from 309 to 268. So many students, look at the volume. The volume is there. That's the proof. And you know their entries are not better than the guru's entries. That's a fact. You know that. They're always chasing. They're always buying higher. You know for a fact the vast majority of the students who followed this alert got in above $3. In 1 minute later, less than a minute, it went to 268. They're stuck holding the bag. So guess what's happening now? It's a pump and dump. And guess what they're doing? They're panicking. Should I hold? You know, should I stay in the position? Should I get out? Should I cut the loss? Why? And they're asking themselves this now because they didn't have a plan. They rushed themselves into the worst situation you can possibly rush yourself into a pump and dump. That is the worst thing you can do to yourself, is put yourself into a position where you trade a pump and dump and you're not prepared. You will be panicking. And the more you panic, the more money you will lose. As you could see, 3 minutes later, it went to 256. And it just kept on going down, man. 240s, 230s, 220s, 210. You know, is this what you want to do? Do you want to be scalping stocks and trying to make it 10, 20, 30 cents when you could be putting yourself in the overall trend and making 50 cents to $1 a share? You know, I didn't trade the stock the best. You know, I didn't get out at my price target. But guess what? That doesn't mean my students didn't trade better than me. You know, I'm teaching them everything that I've learned over the past 9 years. So look at this trade right here. Freaking killed it, man. Cave Imperia. He was short at 270. So he went with the key breakdown, which is fine. You know, he just understands that he's not going to be able to hold through those resistance breakouts. If that's what he wants to do, then fine. But guess what? He traded the stock better than me. He got in at 270 and look where he got out. This is all real time. This is why I love this chat room. Everything is real time. For those of you who are cynics, for those of you who think this is fake, I have news for you. These are real time timestamps. These are real people. You know, you don't think I traded this stock? Look at my fucking portfolio. These are the trading logs. If that's not enough for you, if you're still cynical, guess what? There's a live trading stream, second link below. I show it all. I'm not afraid. And if you think that's not enough proof, then this is the wrong place for you. You know, I'm raising a positive community, and no one's doing it like me, man. Nobody's live trading their stream every single day, showing their trading logs, and nobody's creating a chat room like this where there's a real-time alert sections where you require your students to fill out the symbol. What stock did you enter? What type of position? Was it short? Was it long? What was your entry? You know, are you in $1? What was your price target? 90 cents? What was your stop loss? You know, 105? What was your risk reward? What was the setup? What was the shares? Why did you get in on the position? Me, not just them, but also me knowing all of that information is going to tell me who needs help, who doesn't need help, you know, who's killing it, who knows what they're doing, who doesn't know what they're doing. And the ones who don't know what they're doing, guess what? I can direct them to the right video lessons. You know, I can answer all their questions. I can help them out. This is a plan. You know, this is what you have to do. You have to create a plan like this, and you have to have some sort of form of risk management, something like this, where you know what your risk reward ratio is, you know how much you're risking per trade, and you know how much your return on your account size is going to be per trade. You know, this is what you have to know. You know, and it's not a lot of work if you trade how I'm trading. I don't sit here and watch the market 7 hours a day because, like I said, my goal is to not be the richest person. My goal is to take advantage of my time because my time is my most valuable asset. And I don't want to spend all of my time trying to make money because, you know, my lifestyle, it's not that crazy. I'm making more than enough money. I'm making 20x to support my lifestyle right now. So I'm living well below my means. If I wanted to, I can get that mansion. If I wanted to, I can get the Lamborghini. But for me, that's just not how I want to do things right now. You know, maybe when I get tens of $1 millions, maybe I'll look to do that. But right now, I'm fine where I'm at. I'm very comfortable. And like I said, I enjoy the freedom. You know, I like life experiences a little bit more over materialistic things. That might be hard to believe because, yeah, you know, I have nice shoes in the background. I'm wearing a Supreme hoodie. I also like nice clothes. That's, you know, one thing I like. But, you know, the amount of money I make, I can support things, you know, certain things I don't need. But that doesn't mean, you know, you should waste money on anything, period. I would encourage you to be even more frugal than me. I'm for sure, I'm not the most frugal person. That is 100% for sure. But I can definitely well above support the money I'm spending. But yeah, like I said, I enjoy my freedom. I value my time. And the truth is, I don't want to spend my time watching the stock market the entire day. And the reason why is all you need is the right tools and the right strategy to make just as much or even more money versus someone who is watching the market all day. And I'll give you one example. This is one tactic I use. So my strategy is buying low, selling high. So, you know, BPTH, okay, so it's up in the pre-market. Let's say I saw this at 7:40 a.m. in the pre-market. I saw it was at 250. So here's what I do. This is all I do. Go back in the chart history, recognize the price, recognize the short zone on where I'm interested in short selling. Okay, I'm interested in short selling somewhere in between $3.30 to $3. So guess what I do? Instead of me watching the stock all day, waiting for it to hit the best price, all I do is right click on create alert, set a price alert above $3, and that's it. I don't watch the stock until the best price hits, you know? The reason why is, one, I value my time, and number two, I could sit here and wait and study the price action, study the level 2, study the volume, right? I could sit here and study that and waste all my time, right? I could do that, but in my experience, when I tried doing that, I ended up forcing a trade and I ended up lowering my expectations and not getting the best entry because I saw the volatility and I fell for the hype. So what you have to do is you have to set price alerts, and so here's when you should only be watching the stock. So, you know, once you recognize the best price to trade it at, so here's what you do. You find the stock off a scanner or in a chat room. Once you find the stock, you identify the best price to buy, best price to sell. Set the price alerts, move on to the next ticker symbol. Once you're out of ticker symbols, step away from your trading desk. Once one of your alert triggers, pull up a chart, make a decision if you want to trade it. If you do it that way, you're only going to find yourself trading 30 minutes to an hour a day. And the beauty of doing it that way is you're only interested in trading the stock at the best price you can possibly trade it at. That way you're putting yourself in preparation, you're putting yourself, you know, in a position to where you're going to succeed, and where you're only watching the stock, where you only have that mindset of trading it, where you're only interested in trading it at that best price. Because once that price alert triggers, it's at the best price. So that one little tactic right there has saved you hours, and it has also saved you so much money from those trades you have been forcing. Trust me, I've been there, guys. You know, having self-education will change your life. You know, that's what I do. I'm self-educated, you know? So if I'm going to go back to, okay, let's see here. I want to double check. So yeah, as I was saying, so he got in at $2.70, and then he got out. So look at this. He even gave some commentary. So look what he said right here at 10:03 a.m. BPTH looks like it is done. Highly likely that it will fill the gap soon today. Tomorrow, unless something crazy happens, LOL. So, you know, he's laughing his ass off, making shit money, while, you know, people in other chat rooms lost a shit ton of money because some fucking guru wanted to scalp a stock, and they were dumb enough to follow the pump and dump, to follow the alert. See, you have to put yourself in positions so you can recognize the overall trend. I'm telling you, guaranteed, you will not end the year on a green note if you keep putting yourself in positions that gurus are doing, you know? And another tactic I have is, if I see a guru who sells his long position at the best resistance level, I usually will get in on that. So they're just selling their long position. They're not even shorting. They're just closing out their long position. While I am short selling once they sell, capitalizing on that downside move. Because as soon as they sell that stock, and if it's trading, now like I said, only at major resistance. So if the overall trend, you know, so in this case, overall trend is a downtrend, and if a guru sells a long position at the best price to sell it at, I'll usually get in on it, you know. I receive a lot of people's alerts because, like I said, one of my strategies is to short sell stocks once gurus close out their long positions at only major resistance levels. Now that doesn't mean, you know, you just go out and do that. It doesn't work like that. It's not as simple as that. You know, you have to have confirmations, trading signals. It's not just, oh, you know, this guy sold a stock at resistance, it's time to short. Like, people just don't take what I said and just go out and use it. You have to learn the entire strategy. It's so much more than that, but it's simple. That's just kind of the concept, kind of mentality. That's another thing I could have done. Like, for example, see, I was in way before him. Like, we got in, Cedric, he got in at 8:22 a.m. I got in around 8:40 a.m. So if I wasn't in, so say I wasn't in at 8:40 a.m. and I knew he sold his long position, odds are I would have gotten in. I would have been willing to get in probably like 280, 290, because this is a really bearish confirmation. So this is another thing we have to go over, bearish confirmations. So, you know, it's downtrending, it's getting crushed. It already hit 273. So yeah, you know, it started spiking. It got to a high of 309, big deal. You know, of course it's going to have a little spike. I mean, fucking 900,000 in volume, shit ton of buyers. What do you expect to happen, right? But guess what? This is the key, that it's going to be a fake out, this 1 minute candle. This is a bearish candlestick. It got to a high of 309 and that candle closed at 273. So that means it's a fake out, and this is a very bearish candlestick, which means the stock is going to get absolutely annihilated. So once my group saw this bearish candlestick, our confidence was through the roof, man. We were so excited that our price target was going to hit. And man, if I would have known at the time that he sold his, Ross Cameron sold his shares on this 1 minute candle, shit, I would have been 10 times more confident. I probably would have held it the whole entire day. But if you watch that live trading webinar, you're going to see me repeat consistently, yeah, I got out. I know I got out too soon. And you're going to see me say, I know my price target's going to hit. I still know it's going to hit, you know, but sometimes I play it safe. That's just how it is. Sometimes I'll play it safe. But, you know, even though I got out, I told my students, man, hey, you know, you should still hold it. I mean, Cave Imperia, he held it all the way to, let me see. He got out, so that was his commentary, that he was confident he was staying in. And as you can see right here, he got out. He said, nice, BPTH at 2:11 p.m. He said, nice, BPTH, waiting for $2. And then he said right here, BPTH at $2.07. What a play, all the way from $3. It is getting close to my price target at $2. So yeah, man, he's absolutely killing it. Fernando's another student who capitalized off this trade. He covered at 220. Let me see if he alerted where he got in. Let's see. Okay, right here, see? He got in after Cave Imperia. He said same here. Short sell BPTH at 273, and he covered at 220. So it's just awesome to see that students are trading better than I am. That's the goal, man. I want to create self-sufficient traders who are going to become better traders than me. And some of these guys will, I know that. Some of these guys, one day, they'll be teaching me a thing or two. And the reason why is, I really take advantage of my freedom. I love what I do, but I only put in, now that I am where I'm at, I only put in probably like 2 to 3 hours a day on it. Some of these guys, they're going to be here all day. They're going to identify new trends. Like I taught them how to identify their own trends. They're going to find new trends, new strategies, new patterns. The ones who work the hardest and put the most time in, they're going to end up doing better than me. Eventually they're really going to get up there. So yeah. So let's go over the exit. So like I said, once we saw this bearish candlestick, confidence level through the roof. That's a bearish confirmation and it's already at support. That's our confirmation that support's going to crack. So we continue to hold the position. So let's see where I got out. Let's see. Let me find that alert. Short covered. All right, 9:38 a.m. So 9:38 a.m. I got out. Let's see where that was at. But like I said, man, if I would have known he sold his shares, I would not have gotten out. My confidence would have been so much higher. So like I said, it pays to know information. It's like you might think it's dumb to pay somebody maybe $1,000 a year just for alerts. I think it's smart, especially if you have the bankroll to support that financial decision, or you can go with a monthly fee. I think it's smart because, like I said, you shouldn't be following their alerts, but you can get an idea of what their strategy is by seeing where they enter, seeing where they exit, being self-aware, not even watching their video lessons, just, seeing what they're seeing. And also you can capitalize off of when they're wrong, because when they're wrong, their students are going to sell with them. They're going to close their positions with them, which is going to easily bring that stock to your price target. Sometimes these gurus, in my experience, at least this guru, he's wrong the vast majority of the time. Like, yeah, you may be scalping and making, some money for him, but his students can't say the same, unless if that's what you want to do. If you want to scalp, it's tough to scalp when you're following somebody. It's very tough to do when you're following a guru. You're gonna get stuck holding that bag. So I got out 9:30 a.m. So I got out right here. Okay, so here's why I got out. So I got out because I recognized the new price channel was 266. That was the high of it, and the low was 253. So my price target basically hit. I chose not to get out. This is a bullish doji right here. If you see this candlestick form at support, that's very bullish. You should most likely get out of that position or play it extremely safe. So I didn't get out right here because I wanted to hold through. I was extremely confident. I even said in the webinar, I felt this is going lower. I think it's going to go to $2. But like I said, I always don't hold until my price target. Sometimes I do, sometimes I don't. So anyways, this is a very bullish confirmation. And once it started breaking out past that resistance, there was resistance around 260s. It got to a high of 275. Once that happened, I got out. As you could see, as soon as I got out, there was a huge volume bar, one of the highest for the day, 515,000. I got out, man. I had to play it safe. I didn't want to risk holding through any sort of breakout. And what scared me the most was this candlestick. This is a trend reversal candlestick. If you see it form at heavy support, this is a heavy support channel, guys. 250. This is a big deal. Last time it bombed at 250 around here, it went to 330. Worse. And my price target already hit. It hit 253. So I figured, you know what? I might as well get out at 275. My price target hit. We got a bullish candlestick. That's a sign of a trend reversal. And then I told myself, you know what? Get out, lock in the gains, and you know what? If this goes back to $3, then I'll just get back in. So it didn't go back to $3, so I didn't settle for less. That's something I try to tell my students, man. Don't settle for less. You got to do what me and Cedric are doing. Cedric's in at 319. I'm in at 306. So yeah, we did cover too soon. I got out at 275. He got out at 289. We covered too soon. But I'm telling you, we're putting ourselves in much better situations versus, Ken Vampiria in a 270, Fernando in a 273. So guys, I'm telling you, just focus on trading at the best prices possible. You will soon recognize how much of a difference it's going to make over the long run, because you're going to be able to hold through those fake outs. You're going to see it happen all the time where a stock breaks out towards resistance and you're like, oh, I have to get out. But since our entries are better, we have a little bit of a cushion so we can hold through. And if it's a fake out, our price target's still going to hit. And then you're going to be like, oh man, I should have held, I should have held. There's no such thing as should have held. What you should have done is you should have gotten a better entry. That way you can risk more and capitalize off of a fake out and give yourself that opportunity. So I can't stress that enough. I can't control what you do. Cedric, he's doing it best right now. He's quadrupled his account. So if you guys want better results, I mean, I'm happy. I'm so happy you made more than, they made more cents per share than us. They traded it better than us. But like I said, I would rather have a better entry than get out at my price target, because that's playing it safe. So guys, I'm glad you maximized your positions and I'm so glad you killed it. Just focus on getting a better entry. Trust me, you'll thank me for it in the long run. But still, man, I mean, they're still phenomenal entries. And like I said, even if their entry is at 270, even if it's a lot lower than ours, that doesn't mean that it's a bad trade, because you have to understand their risk reward is always above a 3. They're always doing that. So like their entry may be a little bit off, but their risk reward is fine. They're just, what I don't like about that entry is they're just not putting themselves in an opportunity to where they can hold through like a BS spike like this, because that's all it is. It's just BS. Like, yeah, it spikes, but that's just the trend for the next couple minutes. What about the next few hours? What about the next few days? So if you respect your stop loss and your entry is not the best, you're not going to be able to hold through that BS couple minute move, man. So I'm just saying, I can't stress enough, so hopefully some of you guys can work on that. But I'm very proud, you guys made more than us, 50 cents a share. Phenomenal trades, guys, So yeah, that's in a nutshell. Wow, 1 hour and 10 minutes. I mean, time flies by when you're talking about your passion, right? So what's it going to do today? Well, there's a gap to fill below. For those who don't know how to figure out where a gap fills, identify the day it had a gap up or gap down, which is here on April 3rd, had a gap up. Go back to the previous day, take the closing price, 177. One of my students, who is probably smarter than me, he actually created this indicator that tells me the previous closing price. So I don't even have to go back throughout the chart history. So if you look at this little like turquoise blue line or whatever, you can see the previous closing price is 177. It's highlighted right there. So having that cool little indicator, that's what I use. I use the previous closing price. I don't use the EMA, the simple moving average, the VWAP, all this nonsense. You guys would soon understand. You don't need to use any indicator, the RSI. I should just get rid of that. The past couple months, I haven't even looked at it because I'm just like so confident. And like with my strategy, I just understand that I don't need any of that, because my intention is to trade the best setups, which would be my unique gap strategies that took me over 9 years to create. So I use these best setups, right? And I trade them at the best prices. So if you combine those two together, only thing that's missing is your like trading signal. So like my trading signals aren't, indicators. They're just candlesticks, support and resistance, the gap strategies, volume, consolidation, just little patterns. So yeah, I mean, you really don't need them, guys. I mean, if you're trying to scalp, I could see why you would want them if you were scalping. I would see why you care about level 2 if you're scalping. So level 2, it's great if you want to know where a stock is going to be at the next second. But me personally, I care where it's going to be, not just the next couple minutes, not just the next couple hours, not just, couple days. I care about the overall trend. I don't care where it's going to be the next second. I care where it's going to be a couple hours, couple days from now. So that's another, I don't talk about level 2 too much because I don't scalp stocks. So you have to figure out, what strategy do you want? Do you want to scalp stocks and try to make 10, 20 cents and, get stuck in a bag one day and lose 80 cents, lose all your profits, right? And do you want to scalp stocks and have only a 2.0 risk reward ratio, lower chances to succeed, not putting yourself in a situation to succeed if you have a low win rate? The lower your risk reward ratio is, the higher your winning percentage has to be. So you need to think these things over, man. I'm telling you, when you're just starting out, have the highest standards you're ever going to have. Because if you do it that way, you're putting yourself in the best situation to succeed, which is what you need to do, especially when you're just starting out. In my experience, it is easier to make more money when you have a lot more capital in the market. So if you're not in that situation, then don't settle for less. You know, your risk reward should be higher than mine, right? Your entries should be better than mine. I'm telling you, man, I understand like 95, probably a little bit more than that. 95% of this people, 95% of, people watching this video, they're going to walk away and they're going to still, follow Guru's alerts. They're going to still buy stocks, at the tipping top, thinking it's going to be a breakout, when the vast majority of the time it's going to be a fake out. And the reason why it's going to be a fake out is because the overall trend is a downtrend. You're betting against history. People who consistently bet against history are the ones who are consistently losing money and ending the year on a red note. I don't care how much money I make today or how much money I make in the next 6 months. What I care about how much money I'm going to make for the entire year. Because once that year ends, you have to file for taxes. And if you're ending the year on a red note, you wasted all of your time. Not just your money, but your time. And your time is far more important than your money. So keep that in mind, guys. When you're just starting out, can't stress it enough, your standards should be the highest. Once that account grows, you'll soon notice you'll have more advantages, you'll have more capital. If you want, I'm not telling you to, you should continue to raise your standards. But once you have more capital, it will be a lot more easier, and you can lower your standards a little bit, but your risk reward should always be above a 3, and you should always put yourself in a position on where the overall trend is, which means you should not only be right for the next couple minutes, but you should also be right for the next couple hours and the next couple days. So if your intention is to only be right for the next couple minutes, then I'm just going to label you as a scalper. I've been in positions where my price target hits and I make a huge return within a couple minutes. But I'm telling you, man, if you're not in that overall trend, big losses will come over time and you will not end this year on a green note. So I hope you guys took something away from this video. The reason why I share information like this for free is because in my experience, the vast majority of the people who watch these videos do not listen. So, the reason why I make them is as long as one person walks away from this video and, can change their mindset and can benefit and can see results from what I'm saying, then I'll make the video. The truth is, honestly, I'm pretty happy that 90% plus of people are going to go away, learning nothing from this video, and they're going to keep doing what they've been doing. They're going to keep losing money. The reason why I'm happy about that is the more people who listen to what I'm saying, the more competition I'm going to create for my students and I, which is why, the group, my mentor program, that chat room, all this live trading stuff, all the education, it's currently closed because the more competition I create, the harder it's going to be for, not just myself, but for my team to make money. So yeah, that's why, a video like this, it's probably not going to be up for that long. I'll probably keep it public for a couple days, and then I'll make it private for the students who join the mentor program. But every once in a while, I like to give back to the community, and I like to share with them the truth, and I want to help make them money. And, the reason why I'm sharing with this publicly is I do understand that I'm not going to create enough competition to influence anything we do. So it's not a big deal if I share it for free, right? Because I'm not going to create a lot of competition because, like I said, 95% of the people watching this aren't going to get anything from it. The main reason is because it's a free video. That's the main reason. People don't take stuff that's free too seriously, which is why I like charging people. They take it far more seriously, and they tend to see results a lot more faster. It tends to shave the learning curve. So I hope you guys enjoyed this video and learned a lot. Please take what I'm telling you, man, if you want to make some money. And hey, at least, start paper trading, start seeing that these gurus, it's all bullshit, man. Like, you got to wake up, man. Stop being a sheep. So many sheep right now watching this video. Like, you got to wake up, start being observant. Who cares what they're telling you? Be observant, recognize, look at their trades, man. Are they right for the overall day, or are they just right for the next few seconds? If they're only scalping, only right for the next few seconds, guess what's going to happen, man? You're going to follow the alert. You're going to get a terrible entry. They're going to sell the stock. You're going to get stuck in a bag, which is exactly what happened to several of his students today. And if it happened today, guess what's going to keep happening? History tends to repeat itself, guess what's going to keep happening? They're going to keep losing money. I see this all the time. I just wish I would have known. I wish I would have known real time. Like, shit, I have to buy a subscription from them. If I would have known that information, I would have made an extra $15,000 today. So yeah, it's worth paying somebody, a couple $100s for alerts when you can make $10,000, $15,000 betting against them, not following them. If you follow people, like I said, you should only be following someone's alert if you understand the why factor, if you understand all that stuff, you know. You'd have to be a moron to follow that alert that was sent out today, because the overall trend was bearish. And like I said, I've been there before, you know, so just learn from your mistakes. And it's a blessing that you found this video, because it's not going to be up for that long. So it's a blessing that you found this video. Just take what I'm saying, put it into action, start experimenting, you know, start dabbling in the market, try something new. We're in a bear market. You should be interested in short selling. You know, we're in a bear market now. 3 out of 4 of the stocks are going to follow the market. But in my experience, when it comes to short selling, if you're just day trading and you're focusing on penny stocks, bear market, bull market, it's irrelevant. You know, it doesn't matter. The strategy is going to work just as good. I would say slightly better in a bear market, but the strategy is going to be like just as good in a bull market. Because, you know, we've been in a bull market for quite some time, and all I've been doing is short selling, and all I've been doing is making tens of thousands of dollars every single month, consistently winning 70% win rate. But in my experience with buying stocks, it only works well in a bull market. So now that we are in a bear market, and you have to keep in mind, these stocks that these gurus are buying, these are terrible stocks that are consistently, some of them are consistently reaching, I can't stress this enough, consistently reaching for new all-time lows. Why would you want to buy BPTH when it's trading at the high end of the channel, trading in the 3s, when you know it can go to $2 the same day, when you know there's a gap to fill below at 177, and guess where it's going? It's going to fill that gap below today, because you got a bearish candlestick, which means it's going to have the first red day today. And when you know it's a terrible stock that's consistently reaching for new all-time lows, what is your desire to buy trash at the highs, right? What's your desire? If it goes above 330, guess where it's going to go? It's going to go to 350. You make 20 cents. And guess what happens? There's still $1.50 of downside left. Like, people need to wake up. Like, I'm just trying to wake a couple people up. I'm hoping I don't wake too many people up, because like I said, I don't want to create too much competition to where the strategy doesn't work as well. I would hate to do that. Like, if I ever see that happen, that will be the day where I stop teaching and I just conversate with the members I currently have in my group. So yeah, that will wrap up this video lesson. If you enjoyed it, smash the like button, subscribe to the channel, turn on push notifications, watch me trade live for free. And last thing, there's a free mailing list. It's the first link below in the description. You click that link, all you need is a Facebook account. It's going to subscribe you, you know, if you know what Facebook Messenger is, it's going to subscribe you to a free mailing list. You can unsubscribe at any time. All you have to do is type stop. It's not just automated messages, it's me talking to you personally as well. And what we're going to do is I'm going to send you nothing but value. We are not going to spam you. I'm going to be sending you exclusive content, exclusive video lessons, free watch list, you know, coupon or discount codes. You'll be the first to know when my program opens up. Right now it's closed. I don't want to create too much competition, and I also have to focus on, I like focusing on a small group of students, you know, mentoring, spending hours of time with people. I have to focus on a small group. I don't have time to mentor thousands of people. And to be honest, I don't want thousands of people, because I do not want to risk losing this strategy. So yes, I do want to help people, but there is limits to how many people I can help, because one of the variables with short selling is we tend to short sell hard to borrow stocks, which means there's inventory, right? And we have to borrow shares from the clearing firm. So we have to borrow shares from a clearing firm, and there's only a certain amount of inventory. So the more students I have that learn my strategy, for example, Cedric, and remember, they're not following my alerts, you know? So for example, Cedric, he got in BPTH before I did. So suppose I had tens of thousands of students like Cedric who got in before I did. Guess what's going to happen to me? I'm going to be shit out of luck, because the shares to short are going to run out. Because the way short selling hard to borrow stocks work is it's a first come, first served basis. So that is why, for that reason alone, I can't, there's a limit to how many people I can teach at a time. And, you know, there might be a time where I have to stop teaching, you know, because I cannot risk losing this strategy. But the reason why I dropped out of college is because I wanted to help people, not because I was making a lot of money trading stocks. I wanted to start my own business, and I wanted to help people. And like I said, I give away a lot of value for free, but I do charge people, you know, because just think of it as an investment. You're investing, you know, however much the program is, maybe, you know, 2,000, 3,000, whatever the price is, I don't know yet. It's going to be a new program, but you invest in me. And if you do that, you're going to make your investment 10 times more within the first year. I mean, Cedric, he's already quadrupled his account, you know? So a couple thousand to him, it's nothing. And I have so many students. Rafael Redondo, he turned $3,000 into $100,000. His Twitter is @RAF_red. They're absolutely killing it, man. So that is going to wrap it up. Like I said, the best thing you can do is be self-educated and invest in yourself. If you're interested in those opportunities, click the first link. I'll let you know when the program reopens up. I'll also give you a bunch of free stuff that's going to give you nothing but value and is going to make you not just become a better trader, but the longer you stick with me, you will unlock your full potential as a trader. So I am done. I hope I helped at least one person, because that's what I was here to do. That's why I took out an hour and 23 minutes of my day, is to help at least one person. So I accomplished my goal if I did that. If I helped out too many people, then I'm in trouble, you know, because I want to short sell these stocks too. You know, my students and I, we don't want to create too much competition, because like I said, first come, first serve. Shares to short run out, you're shit out of luck. For those of you who are newbies watching this is probably not the most beginner video. I completely understand that. I do like to teach more experienced traders. But yeah, subscribe to the channel. I will teach you the right tools to use. I will teach you the basics. I will teach you the right brokers. But guys, stuff like that, it's all out there. You know, from me, take the best stuff. I mean, if you want to learn the basics, it's all out there, man. It's nothing special. But what I'm teaching is special. You know, within this video, that's special. That's not the basics. So I'm going to wrap it up. I hope you guys enjoyed this video, and I will see you guys later today. Going to be doing another live trading webinar, probably make a couple thousand. So I'll see you guys soon.